welcome back to see you on the show. Today, we're talking about one of the most talked about innovations in financial services, stablecoin, in the world of digital assets, and what specifically that could mean for credit unions. My guests today are Becky Reed with BankSocial, Cooper Thompson from Fiserv, both deeply involved in bringing new technology and payment solutions to the credit union movement. Welcome, both Becky and Cooper. I'm delighted you could join me today. And I was hoping, as always, the credit union movement is a special place full of wonderful people. How did you, Becky, how did you get started working with credit unions? I know you were a CEO, but how'd you get started way back?
So way back in the 90s, I mean, oh my gosh,
Way
in
back
the
in the 90s, I
90s,
had pubes.
yeah,
It was
I
amazing.
know. So to be perfectly honest, I was working in the retail space. I was a manager for a retail record store. Yeah, remember when you could go to the mall to buy records? So
Wow.
yes, I was a retail store
Explains the
regional manager.
headphones. It makes sense now. I get
Yeah,
it.
yeah. There you go, the pink headphones. Um, but I was honestly tired of retail hours, right? I worked till 10 o'clock at night. I worked on the weekends. The holidays were like nightmares. And I was like, you know what? It would be really cool if I could just have banking hours. And so that's really how I got started. A credit union hired me, a bank did not. And the rest is history.
Right on. All right. Cooper, how about you?
Yeah, so I started my career in the financial services space and this is kind of quite the mouthful, an anti-money laundering quantitative analyst. Really in the banking area, quite the mouthful. Essentially building out financial models that would catch financial crime. And then I saw an opportunity at a company called Finxact, a next generation core processing system of record designed for financial institutions of all shapes and sizes, banks and credit unions and large banks. And I joined the company. Within a few years, we were acquired by Fiserv,
Hmm.
which really broadened the toolbox. So I kind of went from the startup world to the large corporate world. But it really broadened the toolbox that we have available to us. And also the client base, right? We had the full spectrum of different financial institutions that we had relationships with. And then I moved from Finxact into the larger Fiserv space as now VP of Innovation for Embedded Finance and Digital Assets. And I have the privilege to work with all sorts of different financial institutions. We have been on calls with credit unions of all shapes and sizes that are looking to use stablecoin and kind of more broadly digital assets in different ways, all the way up to large regional banks. So really excited to talk here today about what we're doing in the digital asset space.
We may be tough to keep you contained, Cooper. I can tell you got a lot of stuff going on.
A
Well,
lot.
neat. So day in and day out, what do you spend your time doing, Becky? Like, what is like as a digital assets kind of I don't know what you title yourself, but it's a big goal, right? To help the credit union movement to understand, decide what action to take, and begin to take that action. So, what do you spend your time on in the stablecoin world these days? Like specifically that. I know there's other things you do, but in regard to stablecoin, maybe we ought to ask you first to define it for our listeners, assuming that they don't understand, and then what do you end up doing with it on a daily basis?
Well, I call myself a payments futurist, so I'm looking all the time as at the future of what this new technology is going to be going to enable. Because when I first understood blockchain back in 2015, and I noticed how a Bitcoin worked on a blockchain, I immediately saw that payments were going to be disrupted from a traditional sense. And so, fast forward to today, what I spend my time doing is looking at all of the different ways that finance can work in a decentralized world. So, DeFi, the decentralized finance movement, I've written a book about how the credit union movement and the DeFi movement are very closely aligned, but the capabilities that are available to financial institutions and anyone in the finance area on chain is really unprecedented. And so I get to spend my days really working with my partner and CEO, John Wingate, on use cases for how we can use this technology moving forward. So we get to do a lot of ideating, talking with credit unions about their ideas. Hey, is this possible? Is this something we can do? And then answering their questions about what it's really all about. But a stable coin, I think that was your question at first. A stable coin is a digital asset, a cryptocurrency that maintains a stable value. A stable coin, or as defined by the Genius Act, a payment token, is a token that rides on a blockchain or a distributed ledger, which is a generic term for blockchain, and it has a stable value. So it's backed by fiat currency. So fiat currency is something that a government stands behind. In this case, in the Genius Act, we're talking about US dollar backed stablecoin. So a stablecoin is worth $1. $1 in stablecoin is worth $1. It's not volatile like a lot of cryptocurrencies are.
Very good. Thank you, Becky. And Cooper, tell us, in all those titles, what do you actually spend your time doing every day?
Yeah, so right now my focus is on building out our digital assets platform here at Fiserv. So here at Fiserv, we as I mentioned, we serve all shapes and sizes of financial institutions. Anything from a credit union on the corner to a large regional bank that might serve, hundreds of thousands of customers. And my focus with our digital assets platform is to enable all financial institutions to be able to be brought on chain and to be able to interact with the digital asset space in new and innovative ways. So think about it as the glue, as Becky said, kind of the DeFi space. My objective is to be the glue between traditional finance, TradFi, and DeFi, and be able to facilitate that fiat settlement that might need to happen in order to be able to issue out stablecoins, as well as to tokenize other forms of assets or liabilities to create tokenized deposits. So you could think about Fiserv's digital assets platform as a asset agnostic or digital asset agnostic tool to bring customers on chain to be able to leverage the 24/7, 365 settlement capabilities and programmable capabilities that decentralized ledgers offer.
Yeah, I can't wait to unpack that, Cooper. That's pretty. Yes, we're going to talk about that. So, in my research for this this interview, there's a couple of things that we need to I think we need to first do away with the notion of crypto and how this is not that, and how the uber volatility of Bitcoin and its brethren is not this. So I'd like you guys to talk a little bit about that. Then I want to read this quote from a McKinsey study I read in preparation. Stablecoins have now become a genuine contender to satisfy new payment needs, achieving the first true market fit for digital assets. In particular, stablecoin-based payments are nearly instant, incur, they said, lower cost. From my research, massively lower cost for international payments, increased end-to-end traceability, visibility on chain, 100%, near 100% upside of the system, and expand access to payments through wallet-based rather than account-based infrastructure, which is, whoa, that's a whole concept that I frankly don't understand, the wallet-based versus account-based infrastructure and how that would work for credit unions. So I think we have a lot to unpack there. So let's see. So the next thing I was hoping to cover about is the Genius Act. So Cooper, why don't you tell us a bit about the Genius Act? Like what was it? Why does it affect? How does it affect credit unions? What choices are now present? What has been clarified? All that sort of stuff. And then if you want to add to it, Becky, feel free.
Yeah, great question. So the Genius Act was one of the first of three big acts that are being worked on right now in terms of the crypto space. There's the Genius Act, which covers stablecoin issuance. Then there's the Clarity Act, which covers kind of more broadly the crypto digital asset space, especially things as it relates to what is going to be regulated by the CFTC, what do derivatives mean, how does staking work, what does that mean from a regulatory perspective. The DeFi space that Becky talked about is really covered by the Clarity Act. And then another one, which is really interesting, is the Anti-CBDC Surveillance Act, which is the Central Bank Digital Currency Surveillance Act, that is designed to kind of, halt the Federal Reserve's ability to launch a central bank digital currency without approval from Congress. So these are the three big acts that are kind of being worked through right now, with the Genius Act being the first one. And the Genius Act brought the clarity, and I hate to use that act name, but brought clarity to the stablecoin space as it relates to what is required to issue a stablecoin, what is the definition between a non-financial institution issuer and a financial institution issuer, the requirements for high quality liquid assets backing the stablecoin in the form of short-term U.S. Treasuries and cash, and what can qualify there, as well as the audit, the transparency requirements. And then another really important part in there is this provision around stablecoins being able to yield interest back to the users, where stablecoins cannot have yield-bearing capabilities as a payment stablecoin. So the Genius Act is very specific on calling them payment stablecoins, not just stablecoins, because they're designed for movement, money movement, settlement, kind of like a digital cash layer. And so the Genius Act had that in there. That way, the stablecoins will not be a replacement for traditional banking products like demand deposits and yield-bearing accounts like savings accounts, money markets, so on and so forth. And so that's kind of where I see the Genius Act being. I think it was well crafted. There was a lot of thought that went into it. There's additional regulatory clarity that is going to be coming out of that as the regulators start to put the regulations around the Genius Act into the requirements that credit unions and banks and non-financial institution issuers will have to follow. So there's going to be more to come still from the Genius Act, but it did bring a lot of clarity around what a stable coin is and the requirements to issue one.
Becky, you want to take and add anything to that, especially with maybe it's time to kind of slightly start into some of the examples of your interactions with credit unions in this space. Are there any credit unions that you know of that are actually, like, how far down the path are credit unions with stable coins? Like, where are they so far?
Well, there are some fast movers that have already tokenized, and banks have done this too. So they're already looking at tokenizing. And just to be clear, financial institutions have to use a stablecoin issuer. They have to use a third-party issuer for a stablecoin. And so there is a little bit of ambiguity around tokenized deposits and stablecoin, but for the sake of this particular podcast, let's just talk about the stablecoin, the payment tokens, as the Genius Act describes. And so, and it can be publicly issued. So a stablecoin issuer would issue a publicly available stablecoin that people can buy and use for payments. There's also privately issued stable coins that may not actually be in compliance with the Genius Act because they're not publicly available. And so I know some credit unions who've done some private tokenization where they're just trading amongst themselves. Banks have already done this. I think JP Morgan issued a white paper on it actually before the Genius Act even came out. And so this is not something that, I mean, yes, it might be something that is newer, but it is not something that's completely new. These transactions have been happening on chain. Financial transactions have been happening on chain. Cross-border transactions have been happening on chain already. In fact, globally, $4 trillion a month is happening on stablecoin rails right now today. And a lot of that is institutional, right? Huge amounts of money moving in between financial institutions, finance companies, where as it relates to securities, all kinds of things are happening. And there's some consumer activity too. It's just that here in the United States, we're not seeing as much consumer activity as we do see in other parts of the world. I think that might get to, Doug, some of the things you want to talk about, financial equity and inclusion and cross-border. We can talk about that in a little bit. But most credit unions are curious. Some credit unions are moving quickly. I can tell you banks are moving even more quickly. And so what I don't hear in the credit union space is, this is going to blow over. This is something that's not a big deal. We're not going to pay attention to it right now. No one is saying that.
Yeah, when I as a result of this podcast, when I dug into the cost savings for international payments, it absolutely blew my mind. So I can talk about that after. I want to hear from Cooper. Do you have any examples that you can share about what's happening in credit unions with the stablecoin space? What are you seeing?
Yeah, so adding onto what Becky said, and we can stay focused on stablecoin, but something that's really interesting that I've noticed is that credit unions were some of the first ones to actually express an interest in blockchain and decentralized ledgers, because of its way to create a unified ledger between multiple different entities, multiple different parties, and multiple different financial institutions. And so, they were looking at ways to have multiple credit unions come together and kind of form a consortium and be able to do things even beyond stablecoins, like being able to do loan securitization on the chain, being able to do participations, like all sorts of stuff. And they were trying to figure out how they could use the blockchain to facilitate some of that. But we are definitely seeing a lot of interest from our credit unions around how to leverage stablecoins specifically for cross-border payment optimizations, especially as it relates to more of the exotic corridors. There's a lot of solutions out there that can, kind of do the whole cheap, fast, good triangle, if you will, of being able to send payments to more of the more popular international corridors like USD to euros. But then as it relates to getting to more of the exotic corridors, say for some countries in the EMEA region or in LATAM, being able to get funds down there, that's where stablecoin brings a lot of power with this concept of the stablecoin sandwich, which is kind of the most popular menu item that I'm seeing today from our financial institutions. Is they all want a bite of the stablecoin sandwich.
And listeners, it is 11:56 a.m. on the East Coast. Cooper Thompson clearly hungry. We're going to have to move right along in this podcast so that he doesn't have to eat any more stablecoin sandwiches. Very good. Well, so I used my good friend AI, and I said to AI, if I was to send $1,000 to Mexico by Western Union, what would that cost me? And I need you guys to tell me if that wasn't a very good test, but it was the one I could think of, just to say what's the cost. And what I was told is it was about $100 in total cost to get $1,000 to someone in Mexico. And so that's what I used as the, all right, so here's the competitive cost to a stablecoin payment. And the time frame for Western Union, I actually didn't think to ask it that. Do you guys know how quickly is that processed?
It can be days.
It can be, yeah. I saw 1 to 3 days for normal payments. I didn't know if theirs was a little bit faster. So let's contrast that with stablecoin. If you had done the same transaction for, I think maybe first let's talk about the cost, and then let's talk about the how. How would you actually go ahead and do that? Because maybe some of our listeners don't even know how it could be done. So open floor, either one of you.
I'll take it. Because one of the things that really amazed me and cemented my belief that this is the future of payments, and this is where we need to be moving as a financial system here in the United States, was when I very first experienced a wallet to wallet. And a digital wallet is where you hold digital assets, okay? A digital wallet is what is connected to the distributed ledger rails. Those rails are what is used to perform the transaction. At the end of the day, a distributed ledger or a blockchain is just a database. It stores information about transactions that happen with cryptocurrency that rides on those rails. And that cryptocurrency can be a lot of different things, but in this case, we're talking about a stablecoin. And when I very first witnessed a wallet to wallet transfer, I was sitting across from my partner, John Wingate, in a hotel on Friday night at 9 p.m. We were at a conference, and he was like, I was like, how does this really, how do you send me? How can people use it to spend? And he said, here, let me send you some crypto right now. And I was like, really? Okay, cool. So opened up his wallet and said, I'm going to send a token. $5 worth of whatever it was at the time. It might have been Ethereum at the time. And I'm going to send $5 of Ethereum to Becky. So he said, open up your wallet. I did. And I hit a QR code to receive Ethereum. He scanned that QR code, which was my Ethereum wallet or my account that held Ethereum. And I had the funds right there immediately in seconds.
Mm-hmm.
And I was like, whoa, well, this is crazy. And what was even crazier is it didn't matter where I was in the world at that time,
Mm-hmm.
it still would have happened that fast. Now, he wouldn't have been able to scan that QR code because I wouldn't have been right next to him, but it would have happened that quickly. And so, for the first time ever, people around the world are able to be part of the US dollar financial ecosystem as long as they have internet access, which is required to have a digital asset wallet, and it's something of value to trade. That's all you need in order to have a US dollar backed stablecoin and to participate in the dollar economy that we have globally. That is unprecedented. That is a human rights issue that is one of the greatest issues that we're facing in our time, with people having access to fair and equitable financial services, which is what credit unions are all about, right? That's why we were
Yeah.
created in the 1800s in Germany. And so sending money cross border, because it doesn't matter where you're sending it. It doesn't matter. You can be sending it to Mexico. You can send it to Ukraine. You can send it to the UAE, well, anywhere, right? And it's going to be a USDC on the other end. And that is incredible. And yes, it's much, much cheaper. And yes, it's much quicker
But
and
let's
safer.
just say I was sitting next to you and I sent you a Venmo payment at the
Yeah.
same moment. I'm sending you a Venmo payment. Can you contrast those two for
Yeah.
me? Like, is it? I don't.
Yep.
Yeah. What's the difference?
So in my Venmo, right? So Venmo is just looking at a custodial account that Venmo holds on your behalf. So when you have money in your Venmo wallet, it's just sitting at the bank that Venmo uses, earmarked for you. Okay. Very similar to Coinbase, actually. But that's all it is. And in order to spend it, you have to get it somewhere, right? You have to unless you're using another Venmo wallet to send it to, you have to, how are you going to get it to your bank account? But it's a similar experience from a Venmo to Venmo. The
Mm-hmm.
difference is the off ramping it, putting it into your own bank account. But it's a similar experience, which also is about instantaneous, because at Venmo, they just say, okay, now this goes from Becky's Venmo wallet to Doug's Venmo wallet. But at the end of the day, it's all sitting over at Venmo. It's all their money at the end of the day. And so, but from a consumer experience, it feels almost exactly the same.
So I have to, when you sent me that Venmo money, then I have to transfer that to my credit union, and that's how I
Right.
gain access to it.
Right.
But if you had sent me it in a digital form, while that Venmo is a digital form, that becomes a, how would I have turned it into cash if I want actual green? How would I
Yeah.
have done that if it was done in your example?
Right. So in your digital wallet, if you're holding, let's say USDT, okay, and I'm gonna tell you why I'm using that example here in a moment. So Tether is a dollar-backed stablecoin, USDT, and it's most notably used around the world. Not so much here in the United States. We mostly use USDC here, but let's give an example of Tether. So if you had Tether in your wallet and you were at a merchant that would accept Tether, then you could use Tether to pay for something right there, right then and there. It's the exact merchant transfer, tap to pay. It works very similar to using your Apple Wallet
Okay.
today.
Yeah.
And you can actually use Tether to buy things in an airport in Latin America. There's several airports in Latin America, and the only form of payment they take is Tether. So that's why I used that particular example. Now, if you were here in the United States and you wanted to turn that Tether dollar back into a dollar that you could hold in your bank account so that you could earn interest on it in a money market account, that's called an off-ramp. So the USDT token goes back into the world and the dollar goes back into your bank account, which is why there has to be reserves that are backing the stable coins so that when you want to turn it back into a dollar, the funds are there in order to be able to do that.
Wow, very interesting. Cooper, let's go after international payments. Again, in my example, it was going to cost about $100 to get $1,000 to Mexico. I didn't think of other places in the world. I don't know what it costs to send money other places. Can you contrast that if I had the ability to do that with stablecoin? How long would it take? How much would it cost? And then if you have information about other places in the world, especially that are significant demographics for credit unions. I know credit unions have lots of Latin American members, so this is an underserved community that could have a massive cost reduction from this initiative. So please tell us about it.
Yeah, so that's a wonderful question. I'm going to go back to the stablecoin sandwich, and yes, it's because I'm a little bit hungry. So the way the stablecoin sandwich works is you have the on ramp, which is where you go from. Let's take the example of US like a US dollar denominated stablecoin or backed stablecoin, because a stablecoin could be a US dollar stablecoin, there could be a euro stablecoin, any kind of government fiat currency can have an associated stablecoin, or even any kind of asset, right, from a fiat perspective. So you have the on-ramp where you go from USD to a stablecoin, and that's kind of a minting process where you mint the stablecoin on the chain. So you're taking collateral, converting it into a stablecoin, and you have the digital representation of it on a blockchain or a decentralized ledger. And then you could send, and then there's when you're in the wallet world, you're in the crypto address space. So rather than being in the account space, like a DDA account number, an ABA number, now you're in a wallet space. And a wallet address, the public address, is this long string of characters that represents a unique address or account within a blockchain. And so you can send that stablecoin then to another address. And what's really interesting, and there is pros and cons to this, is that in the decentralized ledger space, payments are borderless. A wallet does, and there's no concept of time as well in a decentralized ledger. There's sequencing, but no concept of time. There's no 24/7, 365. It's just all the time, and it's just sequencing of the transactions. Now, this is great from a movement perspective, but really challenging from a compliance and regulatory perspective. So just as Becky said, you can move funds to Ukraine or to Europe or to Japan or to Mexico. That wallet could also be in a country that might be sanctioned, like North Korea or Iran or one of the other sanctioned countries. A wallet doesn't really care where it is. And then on the other side of that stablecoin sandwich, you have the off-ramp. Now, here's what's really interesting. When you talk about time, it depends on if you are off-ramping into the local currency or if you were just sending a stablecoin amount to somebody in that country. Because many times, if you have a country that might have a more volatile currency for their fiat currency, they're going to say, hey, I don't want to off ramp it. Just give it to me in stablecoin, and I'll hold that, and I hedge against inflation in my local country. So the timing depends, and also depending on where you can find that liquidity in that country. So, you might have countries that have more established crypto exchanges that will have deep liquidity. And what I mean by liquidity is you have a trading pair. So you have USDC on one side, say for the Circle stablecoin, and then you have the local currency on the other side, and you have that trading pair to go there. And so finding that liquidity is important. You might have countries that have deeper liquidity, and then you might have countries that have a little bit less liquidity, and it actually might take a bit of time to off ramp into that country, but at least the holder of the funds has them in their possession and full control of that USDC. So they know that there is settlement finality, and they have the funds that they can then off ramp. So I know that was a long-winded answer, but yeah, hopefully that helped cover kind of the compliance side of things as well that need to be taken into consideration with stablecoin.
What's it cost? How long does it take?
So if you don't, it depends. So if you already hold the
Do my
stablecoin,
$1,000 to Mexico. Just give me that one. $1,000 to Mexico, assuming
Dollars
dollars.
at the
Sorry,
most.
dollars.
yeah,
Instead of, and it could even be sub dollars depending on what chain you use.
right. And especially if you are sending just to another address, but if you're sending to a account in Mexico that is addressed by what's called the clave in Mexico, which is kind of the equivalent to routing number plus account number in the US, it could take a little bit longer based off of the exchange or the off ramp that you could find there, and could add a little bit more onto the dollars because there's an off ramp component to that.
Yeah.
Yep.
Well,
But if you keep it in stablecoin, then you wouldn't have those fees. But seconds and sub dollars generally is the answer for
yeah.
cost.
Right. If you're not off ramping.
Right,
Yeah.
right.
Yeah. So are families doing this? Is this like when folks are sending money to, and so where are they? Like, is it all on your phone? Like, is that happening now where families are like getting a wallet on their phone and sending it to their relatives that are in Latin America, and they just receive it on their phone and then off ramp it when they need to? Is that happening now?
Cooper will say, but I'm going to say yes. Cooper?
I'm going to say in the US, there is still pretty low adoption. The adoption curve has been pretty shallow when it comes to crypto, unless you are a crypto native individual. And what I mean by crypto native is Becky talked earlier about DeFi. Individuals who want to get into the various speculative tokens and coins. That's typically where people get into crypto. For example, MoneyGram has done some work with the Stellar blockchain for optimization there. And so they kind of use it behind the scenes. I would say adoption in the US there's still a long ways to go when it comes to using it as a payment mechanism rather than as a speculation or investment mechanism.
Right. Yeah, and that's what we're trying to do today, is to kind of talk about the non-speculative side of this, which is a
Right.
tremendously low cost, instant, completely transparent method for the underserved communities and credit unions to be able to send funds as needed internationally. Really quite an incredible innovation that is when you have that many wins, when you decrease cost massively, increase transparency, and increase speed, adoption is just a question of when, right?
Well, and what you didn't mention in that is the anti-fraud capability that lives on chain. That is not something that has quite of a robust capability on other payment rails. So fraud is rampant in financial institutions on all the existing payment rails that we use today, regardless of which one. The existing payment rails we use today are siloed. They don't speak to each other. Even though ACH and wires are both at the Fed, the two payment rails don't speak to each other. And so if person A is sending a wire and they're sending an ACH, the two mechanisms don't know that that's happening. And what you can do on chain with traceability. So you talked about the transparency, right? And Cooper talked about those wallet addresses, those public addresses that are a string of letters and numbers. And if you have that wallet address, you can trace anything that goes in and out of that wallet. And not only can you trace what goes in and out of that wallet, you can see any other wallets that that wallet has interacted with to infinity, forwards and backwards. And so, there's a lot of talk about anonymity, right? So I may not know that Cooper's wallet is 123 ABC, but I can see what is happening in 123 ABC. And if I happen to know, because of digital identities attached to it, maybe I have the keys to unlock the digital identity, then I can see that what Cooper's wallet is interacting with. So the traceability and the functionality there is really unprecedented. Now you have to have the tools in order to be able to do it. Those tools are exist today, but will continue to be more robust. But there's definitely things that we can do there from even a compliance perspective that Cooper talked about. Make sure that wallet's not touching OFAC sanctioned wallets, even though we might not know where in the world it lives. We would know if it is, touching something that's been flagged. So there's some interesting things there. And your use case question, just so that that we do have crypto natives at our company, as you can quite imagine. But one of our employees sends USDC to his mom in Mexico.
Perfect.
And so she prefers to, and she does exactly what Cooper said. She holds it. She doesn't put it in her bank account until she absolutely needs to spend it. So she doesn't off ramp it. So she keeps that stable coin, that US dollar, until she actually needs to use it to spend.
Yeah, I don't even know if I want to open the can of worms of how does taxation work with this stuff. Nobody knows, right?
There are, yeah, and there are certain companies that are working on doing that. To Becky's point about transparency when it comes to fraud and traceability and all of that, there are companies that you have full access to the ledger, right? So there are some companies that are working on tracking that, and then you associate your crypto addresses, and they can track taxes and all of that. And then those same companies are getting contacted by the likes of the IRS and government entities to be able to track it themselves. So, and this is what goes into that anti-CBDC surveillance act that I talked about. That was a big concern, was that if you have a CBDC, you have full transparency, and it's like cash that the government can track anytime who owns it, who's sitting to who. They can claw it back if they wanted to. It's really interesting.
Yeah, one of the things that's got to be hard for stablecoins is the headline. The headlines have not been flattering, right? There's been, and not about stablecoin, but about digital assets, about theft, about criminal activity, about things being lost, and people searching to try to find the digital assets. And my sense, my uninformed sense, is that this is not that. What would you? How would you address those issues, those risks?
I'll let Cooper answer that. I've talked a lot. Go ahead, Cooper.
Um, yeah. So when it comes to the risks and what stablecoin, a lot of that sentiment is actually pre like this regulatory clarity that's come out, right? And so there's been a lot of that negative sentiment. My hope is that as the regulatory clarity comes out, as companies start to offer to traditional financial services, as banks that and credit unions that people trust, right? That people trust to hold their money start to be brought on chain, it starts to mitigate some of that negative sentiment. And that's what I think is going to happen is the traditional finance world and the DeFi space start to merge and the lines start to blur between them, that negative sentiment will be mitigated.
Mm-hmm. Mm-hmm. Yeah, and again, the transparency, speed, and ultra low cost is going to drive a lot of interest. particularly folks to like your fellow BankSocial employee. That's the perfect example I was hoping for of a reality, a real life, thing that happens for thousands, millions of people all the time, right? There's lots of folks that are sending money cross border to help their families, and this
Yes.
could just make a massive impact. This will make a massive impact. It's just a question when. So if you're
Exactly.
a credit union and you're kind of paying attention to this a little bit, trying to decide like when do we start to pay more attention? When does it enter our strategic plan? What are you seeing? What are the first steps that a credit union should consider with regard to this initiative?
So, two things that I tell them to start with, and one of them is to educate yourself. So, listening to podcasts like this, learning about what it means. I don't think it's super important to get caught up in the technology behind it. You know, Cooper and I have thrown out some acronyms and some things that might be unfamiliar
Yes, you do.
uh, to people. So, I mean, it's important, I think, to understand what those mean. But one thing that I say all the time is people ask, well, how am I going to get my grandma to use stablecoin? And I'm like, well, does she use ACH today? Yes. Does she do remote deposit capture today in her mobile banking? Yes. And so you don't really have to understand. We tend to get really enamored with, well, how does the blockchain work and all that? And that's less important than the end user experience. And so educate yourself. But then the next thing is use it. Use it. And, some people might go, well, I'm not going to buy Bitcoin. I'm not telling you to go buy any kind of speculative asset, but there are stable coins out there that you can buy. Download a digital wallet of your choice. There's many of them available. Buy some stable coin and then just send it to somebody. Just buy $5 and move it back and forth so that you can actually see what the end user experience is, because that's the future that we're moving towards. So those are the two places I tell people to start, and include it in your planning to integrate it into your payments platform in the next 12 to 24 months.
So, Becky, if our listeners sign up for a digital wallet and send you a request for 1 cent, are you you're willing to send them 1 cent across to?
Absolutely, sure. Yeah.
You heard it first here on See You on the Show. Becky Reed, good for 1 cent for all of our listeners. Cooper, did you want to add on to that, how to get started idea, what to watch for, what a conference to attend, what to be reading, like just maybe you're not ready for action yet, but you're trying to figure out where that inflection point is, where that market awareness is going to come from, so you will be able to go to action.
Yeah, I think education is the most important part, because this is a completely new concept, right? It is like what AI is doing. It is going to be a completely different paradigm shift in the world of financial services. It has been going on for a while. We've had these peaks and troughs. They call them crypto winters, where we go through a crypto winter, and then we have these crazy things where you have NFTs that are trading on chain, and you have these JPEGs that cost thousands of dollars, and it's like, what is going on? And then all of a sudden you have stablecoin, which is like, how does this one thing do all of these? So I think it's important to become educated. Don't get caught up in the quagmire of the craziness, like the NFTs and everything. Try to see how it could fit into your strategy. Another thing is to question and challenge your vendors that you work with, if especially in the financial services space, and hey, ask them, what are y'all doing with stablecoin? What are y'all doing with digital assets? Like, start to ask them what their strategy is, how they're thinking about it, how they think it could positively impact you as a credit union. I think that's super important to do, is to just keep questioning, what's in it for me? What are you all going to do for me with digital assets? But education by far is the most important part of this.
Yeah, this seems like the kind of thing that, one of the many magical things about the credit union movement is the cooperative nature of it. And a very large QSO, I would think, would be a great place to have some activity started. That was not meant to be anyone's softball. I love the cooperative nature of the credit union movement, and That just makes sense, that some of the risks, some of the research, some of the staffing, the expertise, and the technical aspects would need to come from a very scale place. So with that said, Becky Reed and Cooper Thompson, thank you so much for joining me today. Thank you for your work in digital assets for the credit union movement. I think we've got some work ahead of us, and maybe we'll do this again. And Cooper, maybe we can get like 2 cents from you maybe next time.
Wow. Okay, so
Double.
I love it.
Cooper's going to be hard to reach.
Double it and give it to the next person.
Yeah, right. Exactly. Thanks so much. Enjoy your lunch, Cooper. Okay. Thanks, Becky. Bye, Cooper.